All right, at this point, people say to me, so what is going to happen next year when all these folks come to Washington? And a lot is going to happen next year. I assure you, if you're kind enough to invite me back, we will have plenty to talk about. I refer to my speech as the gift that keeps on giving. There's always something. But what I want to focus on here for the rest of the time is what I think is going to happen this year after the election, but before the elected officials take office. In the tumultuous campaign that's going on now, Congress is going to pass no legislation this year before Election Day. We actually should save on electricity and just turn out the lights on Capitol Hill till November 6th. I can tell you nothing's going to happen. There you go. But that's just till November 6th. That means Congress has to come back after the election for essentially a 3-week session between Thanksgiving and Christmas this year. A session that I call the mother of all lame duck sessions. This is going to be extraordinary because there are a number of provisions that either start or end at the end of this year. First of all those spending cuts from last year, including $1 trillion of defense cuts, those begin next year unless Congress passes something to stop it. Congress has to pass a budget to run the government next year, or the federal government shuts down. We have the Republican version of the budget from Representative Paul Ryan. The Democrats in the Senate brought that up in a show vote, summarily dismissed it. The Senate says they're not going to take up a budget this year. The House Republicans are already discussing, will we need to shut down the government? We have to deal with the debt ceiling again. That was that whole mess last August where we almost defaulted on all of the U.S. debt because we couldn't borrow anymore. Well, it got raised enough to get us through the election, but it's uncertain how many weeks past the election that's going to last. And already you see the battle lines. Speaker Boehner is saying we will not raise the debt ceiling unless spending is cut by more than the amount of the increase. The president is saying I will not allow the Republicans to hold the debt ceiling hostage this time. Boehner is saying this year we really will default. And then probably most important to your clients, the Bush tax cuts, the lower taxes that have been in effect for over a decade now, are slated to expire at the end of this year. That's why the White House Chief of Staff says we have a perfect storm set up for December 2012. Now, if the Bush tax cuts expire, there is a silver lining. That brings in $3.6 trillion of additional revenue to the government. You add that to the $2.1 trillion in spending cuts from last year, and you push the deficit issue off for a few more years. But what a horrible way to do it. Even the most tenacious Democrat, even the president, says you need $2.50 to $3 of spending cuts to go with every $1 of tax increases. This is going to be $3 of tax increases for every $2 of spending cuts. And that does not bode well for next year. In fact, in the past few months, a new expression has entered our vocabulary. An expression we are going to hear over and over again in the months ahead. That expression is fiscal cliff. The fiscal cliff refers to the slowdown in the economy that we can expect next year if taxes go up as much as scheduled and spending goes down as much as scheduled. And all the economists are computing their version of the fiscal cliff. They seem to be coming in around a 3.5 percentage point slowdown in GDP. You'll immediately realize that GDP is not growing at 3.5 percentage points. And that means if we bear the full brunt of the fiscal cliff, we would be thrown back next year into recession. And it is that concern that perhaps forces Congress to compromise during the lame duck session. But it's going to be tough. Let's do a little role playing here. Let's pretend it's now December. Congress has gone through a rancorous campaign. They're forced to come back to Washington. And I can tell you at this point, they really just can't stand each other. We're going to put them in 2 rooms on Capitol Hill. It's a Republican House and a Democratic Senate, because it's the current Congress. It doesn't matter what happens in the election. At that point, President Obama is also still president, regardless of what happens in the election. Either he's been reelected and feels empowered to do what he thinks is right, or he's a lame duck president who can do whatever he thinks is right without any consequence. What are the odds after this campaign, in those 3 weeks? Everybody in Washington links arms, sings Kumbaya, and permanently extends the Bush tax cuts. I'd say pretty low. That means they have to compromise, and that's going to be hard. You might say, well, let's push off those spending cuts. The president has made clear he will veto any effort to unwind the deal from last August. And perhaps more important, Standard & Poor's and Moody's have said they will downgrade the United States again if those cuts don't begin on schedule next year. So it really comes down to what the president believes. In my mind, he holds the key to what happens in taxes. And we learned yesterday exactly what he believes. He said yesterday, it's time to let the tax cuts for the wealthiest Americans expire. And his press secretary elaborated on that, saying he will not sign a bill extending the tax cuts for all income levels, meaning he will veto a bill if it includes an extension of tax cuts for the wealthy. Now, possibly he backs off from that if the economy is faltering. But if you believe that he's going to do as he says, that puts the Republicans in a tough position. Either they say, well, we're not going to pass anything either, in which case taxes go up across the board next year. Or more likely, they negotiate and say, fine, we'll get something passed to keep taxes low on the middle class. Let's negotiate above what income level taxes go up. Maybe it's not $250,000 a year. Maybe it's people making something more. But either way, your affluent clients are facing higher taxes next year. And that's not even the end of the story. Regardless of what happens with the Bush tax cuts, we already know there's a new 3.8% tax on investment income that begins next year. You add the expiration of the Bush cuts to the new tax under health care reform, and next year you're looking at a top tax rate going from 35% to close to 44%, a capital gains rate going from 15% to close to 24%, and a dividend tax rate going from 15% to close to 44%. You're also looking at a change in the estate tax. Right now, any American can give away up to $5 million without any gift or estate tax. If not extended next year, that exemption goes back to $1 million. Now, all of this happens if nothing happens. Congress doesn't have to pass a single piece of legislation. That's our tax system come next year. All right, that is the happy Washington news. Now let's bring it down to your clients. How can your clients work with you to invest assets and make decisions this year to take advantage of what's likely to happen in Washington?